when you sit there in 2Q, 3Q, and you start to see above-trend growth naturally as we snap out of this, fueled by a vaccine as well, and you start to see inflation popping higher as well, do you think they can make a decent argument to say this won't persist?
Well, I think they're going to try initially, but I think we also have to remember that zero policy rates and a 10-year Treasury at a negative real yield are uber accommodative. Why couldn't the 10-year Treasury approximate a zero real yield? And that would put it at about 1.7% either side. And why couldn't Fed funds be closer to 1%? I think there's a lot of scope for them to begin the normalization process, but still have very accommodative monetary policy. I don't think they will. I think this Fed in particular, with Janet Yellen at the Treasury, will also try to remain very patient. But I do expect to see a return of the bond vigilantes, and we'll see exactly where the Fed draws the line on the 10-year Treasury.
Well, Bob, if that's your base case, dare I call it a base case for the middle of next year, what does that mean for one of your overweights, which is emerging markets, local currency bonds?
Well, it means a lot of things. It means that we do see a lot of growth. We particularly want to participate in emerging market currencies. We think, although they've done well recently, when you look back over the last couple of years, they've lagged a lot for many good reasons, the last one being the tariffs and the trade war. A new administration is likely to dial down the rhetoric, and that's one of the places where you still get very high real yields. Look, I don't think the Fed's just going to start to step aside, begin the tapering process, and start to raise rates. In our view, it's probably not until 2022 they start the tapering process. It's probably not until 2023 they start to raise rates. But I think they're going to be faced by bond market investors who are going to want to push rates higher, and they're going to have to step in. And I think emerging market currencies and emerging market debt gives you the best opportunity to benefit in that environment.